Welcome back to Upside Down Data. We need to talk about Bitcoin. Okay, let's go ahead and get into it. So I want to start off by talking about Bitcoin's recent price action. It has been a bit of a scare in the market, and Bitcoin has actually held up better than a lot of other crypto assets, which have really fallen off a cliff, especially if you look at a lot of different altcoins that are out there. And the catalyst, of course, was the conflict between Israel and Iran. I'm not a geopolitical expert. I'm not going to speculate on how that might turn out, but that certainly seems to be the catalyst that ticked this off. And it wasn't just Bitcoin that saw a lot of pain. The stock market, this is the SP 500, also fell off pretty notably here. NASDAQ as well, and the Dow Jones all looking pretty rough more recently. So what I want to talk about is, where is Bitcoin really heading? And I want to talk about it both in the short-term perspective and especially the longer-term perspective. So I'm going to talk about some of the shorter-term data that we have here at the channel, some of our models that are more short-term in their focus, and talk also about some of the longer-term outlooks and what we might think about things going forward. So let's go ahead and get into it with that shorter-term consideration. I'm going to start off by talking about our short-term UDPI risk model. So this is the upside downside potential indicator. It is the short-term version, so it cares about moves that play out over days to weeks. And what you'll notice with this model is it's really good at identifying these periods of really high risk where you tend to see these big corrections off of it, and also lower risk. But being a shorter term indicator, it's also reactive to moves that play out over shorter time frames. And we saw that really happen over here very clearly. If we just zoom in a little bit here, we saw the short-term UDPI get all the way up to 2.24 as we went up to the all-time highs here, 73K. And then we've now started to cool off quite a bit. So we got pretty exhausted. A lot of the upside potential, short-term upside potential, got exhausted here. And now we're going back down, cooling off. And now we have more plausible upside potential than downside potential existing in the short term. So what that might suggest is that if the bull market is indeed still on, we've now cooled off quite a bit. And then we maybe are getting into levels that could set the stage for that next leg up. We just look in the more recent past. This is what's tended to happen, where the short-term UDPI moves up, realize some upside potential, then you have to cool off down to these lower levels, realize some upside potential, cool off, so on and so forth. And it seems like the same thing might be happening again. We did break out to higher short-term UDPI levels with this move up, but it's possible we just need to cool off into these lower levels again before we can set the stage for that next leg up. So it's something I'm going to be certainly watching. But fortunately, there's other data we can look at to get us a better sense of when that next leg up could be developing, again, assuming the bull market is still on. And one of the models I like to look at for this is our Trend Confidence Indicator, or TCI. So this model, as the name suggests, cares all about trend. And really the way that I like to read this model is, how is it moving in relation to price? So if the TCI is trending up, that's a bullish sign suggesting that price might soon follow with it. But if price is trending up and the TCI is trending down, that's a concerning sign suggesting that that trend is weakening, some downside might be coming. And we saw that in this move up here. We saw the TCI aggressively trend up here, and then price exploded up higher. But then we saw the TCI really start to trend down, and price has been nothing but weak ever since. Now, we haven't corrected super deeply off of here, but we are consolidating. And that's really about the best you can hope for with a downtrending TCI oftentimes, is either consolidation, maybe at best a slow grind up, but you're unlikely to see especially explosive movements. Certainly anything's possible, but that tends to not be the case. So what I would like to see is the TCI start to move back to the upside. Basically, if we're getting to low short-term risk levels, and if we see the TCI start to move up aggressively, that may be a suggestion that that move is now materializing, that that short-term upside potential is now in play, and we might be actually starting to gain that upper hand, kind of get some strength back in the market to push price up. So far, I don't see that happening. And so that's where I think short-term risk could easily have more room to fall. But if we do see this reversal on the TCI, I will start to pay close attention. Okay, so that's kind of some short-term thinking. But I think what most people are worried about right now is what's going on in the longer-term perspective. I think what we've seen more recently is, with inflation seeming to be a bit more sticky than a lot of people had hoped, then of course with this new conflict, some concerns that the tone of the market might totally change, that we might lose this uptrend that we've been in, really ever since late 2022, and maybe now down is going to be the dominant direction. I want to talk about some longer term data and what they think about this, and where we might think we are kind of in the market cycle. So the first thing I want to talk about, really focus on, is the long-term risk for Bitcoin. So this is the long-term UDPI, cares what moves that play out over months to multiple months. And so again, higher values mean higher risk, lower values mean lower risk. And you see this model does a really fantastic job of capturing these market cycle tops and also these bottoms and kind of ignoring the shorter term volatility, really getting us that more macro picture of what's going on. And what you'll notice with the long-term UDPI is we got pretty high in terms of risk in this move up to the all-time high here. We got up to just under 2.5 up over here. And again, you do not see that very often for Bitcoin. You only see it when it's going off to all-time highs or at these kind of notable intermediate peaks. So in 2013, there's kind of a mid-cycle peak here, 2019 mid-cycle peak. Then the only other two times would be in the end of 2021 as we went into that double top before moving back down. So given that this definitely appears to be the beginning of a new cycle through here, I think it makes a little bit more sense to compare it to what we saw back here and here in some ways than what we saw over here. And what that might suggest is that if we are still in a bull market, this could be a logical level for a longer period of consolidation. Now, nothing is guaranteed. I want to talk in a minute about how this really could just be a part of just a larger bull market, and in hindsight, it might seem like that. But I do want to raise this possibility, this hypothesis that we might see something like this play out. And I actually personally think this would be healthy to see something like that happen. Now, I don't think we necessarily need to have, this year plus kind of sideways movement like we saw back here in 2019 going into 2020 for ultimately putting in the big parabolic move. But I do think a longer period of consolidation could be quite healthy. The reason for that is that I really would like to see long-term risk cool off from here. What I don't want to see is Bitcoin just shoot off to the upside, long-term risk move up to these really high levels, because that's never been a good thing for Bitcoin when you get there. Every time in its history, when you've gotten to these really high risk levels, then the end is basically in. Or if it's not in, it's very close to it. Really, the only case where the top really wasn't in when those high levels were hit was back here in 2021, and it was pretty darn close. We're up at about 57K when this top happened here. Technically, we got a bit higher here and a little bit higher here, but ultimately, the money was no longer made in Bitcoin here. Money was made in alts, and then ultimately we went into the bear market. So if we do see this kind of risk level again on Bitcoin, I would make, personally, my base case would be the same thing, that the money that's going to be made in Bitcoin has probably already been made, and now we're kind of getting into that late stage of the cycle where there's going to be more risk on maybe in alts, but then ultimately you're going to be playing with fire the longer you stay in there, and eventually the floor is likely to fall out from under you. So obviously not financial advice. You should make of these data as you will. But that's one of the things that concerns me about the idea of Bitcoin just ripping up higher from here. That could happen, but I do think it risks burning itself a little bit too early in this cycle, which could prevent us from really getting to those really high prices a lot of people are hoping to achieve. So that's where I think it would be healthier to see this really come down, come below zero, really get into the negatives ideally, let risk reset to set the stage for the next move up. I mean, look what happened here in 2013. We reset all the way back down to below -3. And then, of course, in 2019, we got all the way back in the March 2020 crash. Of course, no guarantee that would happen. But even if we take that out to similar levels, below -3, and then we went off to the races. So something like that playing out again is not impossible. Now, I'm not saying that -3 is some magic number, but just this idea of cooling off with risk quite a bit, getting lower down on the scale to then really set the stage for that big parabolic move up. Now, I don't know how far we would necessarily have to correct in that scenario, or if just largely sideways consolidation would be enough. But generally speaking, I'd just be watching this model and see if we can cool off more deeply. And that would suggest a healthier, maybe more sustainable base to push in a much more notable move to the upside. So there's no guarantee that that's going to happen, right? The market's going to do what the market's going to do. And of course, it is possible that this is just going to be the top and we just go into a bear market. That's not personally my base case, but it is a possibility. You might look at something like this and say, well, we got to similar risk levels. We went to a big bear market this time. We could do it again. Certainly possible. And personally, I was not thinking that we were going to go into a bear market back through here at all, just because the data didn't support it. We were at low risk. It seemed like we were in a new cycle, and off to the races we went. So I was very bullish this time. I really wasn't entertaining the idea that we were still in a bear market through this whole time. But now as we're getting higher and higher, I think being able to totally dismiss that offhand is getting a little bit more difficult to do. Again, by no means is it my base case. My base case remains that we're in a bull market. But I do think that as we kind of get to these higher risk levels, it's not silly to entertain those ideas or at least have that hypothesis, but then again, assess the relative probabilities. In my opinion, of course, that is still not the most likely outcome. Okay, so one other thing we can look at that's useful is some on-chain data to give us a sense of where we are. And this is one thing that I think can help put into context where we are, and I'll talk about a few more things down the line. So what we're looking at here is the percentage of the supply of Bitcoin that's in profit. So that's just people who hold Bitcoin, what percentage of them are in profit. And one of the things you'll notice in bull markets is that you'll tend to hit this really high percentage, basically 100%, at some early point in the cycle, or relatively early to mid. And then you can kind of sustain that level for a long time with just some volatility. These kind of dips down where more notable percentages kind of fall out of profit, and you can dip down to 80% being in profit before going back up. And if you look at what's been going on now, it really just looks a lot like what's happened in prior cycles, where you'll get these dips down, but then you can continue on your way up. So looking at this on its own, it's not really surprising. In fact, you tend not to be able to kind of support those near 100% levels for very long before you have one of those dips down. And the same thing happened. We were kind of up at around 100% here, and then now we're dipping down. This is totally normal bull market behavior. And so really, I think it's too early from this perspective to just say, oh, that's it, bull market over, we're just going into a bear market. I think this is still pretty much in line with what we'd expect kind of in a new cycle. And I also just think just looking at the chart, I think it can be useful to put into perspective what's been going on versus the past. Here we are right around all-time highs, taking some time to figure out what's going on with Bitcoin, having some consolidation. Is that similar to what we've done the prior times when we've gotten up to the prior all-time high? Absolutely. Just look what happened here in 2020. We got up to it, had a big correction, got up to it again, had another correction before breaking through. Go back to 2017. If we go ahead and look at the high here and go over here to 2017, when we were testing it, once again, we got up to it, had a big deep correction here, got up to it again, a little correction, and then off to the races we went once again. This tends to happen with Bitcoin. Really, the only time we had a more kind of clear just break straight through it was breaking above these 2011 levels over here in 2013. But there's certainly precedent for this happening. And when you just look at the fractal that we're putting in here, I think one of the things that can be useful is I'm just going to kind of draw a bar shape here, bar pattern here, and let's just compare it to the past in bull markets. If you just look at it, it's not really all that unreasonable or all that unusual to have this kind of thing play out in bull market scenarios. Even in the middle of what we now recognize as being big parabolas, similar things shaped up. Now, obviously not exactly the same, but the same general kinds of ideas. So that's where, again, I think it's too early for us to conclude that this is just some suddenly new radically bearish behavior that necessitates us going lower. Again, I think that having that hypothesis is not unreasonable. And if the data really starts pointing bearish, then I think it's something that we shouldn't just bury our heads in the sand and just, hope that it's still a bull market when everything's pointing against that. But I still think personally think it's too early to be saying that, doom and gloom is happening, we're going to fall off a cliff, go into a new bear market or anything like that. And really, we didn't even lose this range yet, from this March low here, we haven't even lost that. And so really, Bitcoin's in a range until it's not right now. So we'll have to watch and see what happens, but that's one of the things that I'm going to be watching. And so looking at this, it is possible Bitcoin just rips from here. But as I was saying, that would not, in my opinion, be the healthiest thing. And that's where I think it is totally possible that Bitcoin could have a longer period of consolidation off of these levels. That would not be totally surprising. But that doesn't mean that we have to be going into a bear market. And in fact, one of the things that could happen if we do have one of those longer periods of consolidation, maybe you have to correct further, is that more and more people would kind of flip bearish. The weaker hands would sell. That would allow the longer term holders to buy in, absorb that supply. Then whenever that next impulse of demand comes, then those people who bought are waiting for higher prices that can send price higher. Now, in that scenario, we'd want to watch the data and see how it unfolds. Does it look bullish, or are things showing up that are concerning that look more bearish longer term? But I do think that risk resetting would, everything else being equal, be a very good thing for Bitcoin and might really reward people who have the patience to endure that. Again, no guarantee that happens, but I would really personally like to see that, to think that Bitcoin could have a longer, more extended full cycle to really get us up to those prices that people are looking for. But ultimately with the market is going to do what it's going to do. And so kind of getting anchored to one expectation or one belief or one thought about what Bitcoin needs to do can be, in my opinion, a little bit dangerous. I think holding an open mind makes a lot of sense. Basically take what the market gives you. And so if it suddenly looks like Bitcoin is going to go into a bear market, then don't just be so anchored in this thought that Bitcoin has to get to 100K that you can't recognize that. But also, if things start to get a little bit fearful and a lot of people are calling for 10K, don't necessarily make that be the thing that has to happen before we can go higher, because that can also be a bit dangerous. That's why I prefer to remain flexible, take the data as they come in, and then form my opinion from there. That's why I was bullish back here when everyone else was bearish, because I was just following the data, not listening to emotion and narratives. So obviously not financial advice. You should do what you think makes the most sense and make of these data as you will. But those are some thoughts that I have with Bitcoin right now. I think a longer period of consolidation could happen and be quite healthy, and we have to watch how the data unfolds from there. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates around models and more over there. You can go to our website, partydigital.io, to see live data from our models and more.